Stock market today, Dow, S&P live updates for July 21st. Stock market update, insights on the Dow and S&P for July 21. As of July 20th, 2025, at 6:37 p.m. Eastern Daylight Time, and updated on July 21st, 2025, at 1 p.m. Eastern Daylight Time, we are witnessing a remarkable surge in the stock market as corporate America embarks on a bustling week. Stocks have reached unprecedented heights, with traders eagerly searching for indicators of robust earnings despite looming tariff uncertainties. Interestingly, Treasury yields have decreased, and the dollar has followed suit. In the current landscape, where significant economic data is lacking, Wall Street's attention is firmly fixed on the future prospects of companies. The S&P 500 has impressively surpassed the 6,300 mark. Notably, a measure of the so-called Magnificent Seven, a group of major tech giants, has seen an increase of approximately 1%. This week is particularly crucial as both Tesla Incorporated and Alphabet Incorporated, the parent company of Google, are set to announce their earnings. Traders are particularly keen on these reports, as they will provide insights into spending trends in artificial intelligence, a hot topic that could shape market dynamics. But here's where it gets controversial. The focus on AI spending raises questions about the sustainability of such investments and their impact on the broader economy. Are we witnessing a bubble, or is this a genuine shift towards innovation? As we navigate these developments, what are your thoughts? Do you believe the current market trends are sustainable, or do you foresee potential pitfalls? Share your opinions in the comments. Nasdaq and S&P 500 hit record highs, tech earnings and trade talks in focus. In a remarkable turn of events, the S&P 500 and Nasdaq have both soared to unprecedented heights, driven by the impressive performance of major technology companies as investors eagerly anticipate a week filled with significant tech earnings reports. This surge in the stock market is further fueled by a sense of optimism surrounding potential trade agreements, which has positively influenced market sentiment. As of 11:21 a.m. Eastern Time on July 21, 2025, the S&P 500 index climbed by 34.97 points, marking a 0.56% increase to reach 6,331.90. Meanwhile, the Nasdaq Composite saw an even more substantial rise, gaining 147.24 points or 0.71%, bringing it to 21,042.87. The Dow Jones Industrial Average also experienced a boost, rising by 201.87 points, equivalent to 0.46%, and settling at 44,544.76, just a hair's breadth away from its all-time peak. In a noteworthy development, Verizon Communications Incorporated saw its shares jump by 4.1% after the company raised its annual profit forecast, which in turn invigorated the communications sector, making it the top performer among various sectors. This positive momentum was echoed across the tech landscape, with most major tech stocks experiencing gains, pushing the S&P's information technology sector up by 0.6% to achieve a new all-time high. The spotlight is particularly on Alphabet Incorporated, the parent company of Google, and Tesla Incorporated, both of which are set to release their earnings reports this week. These results will kick off what is being referred to as the Magnificent Seven earnings season, and they hold the potential to significantly influence market trends. Shares of Alphabet rose by 2.1%, while Tesla's stock dipped slightly by 0.2%. Notably, both companies have underperformed compared to their peers this year, with Tesla down 18.5% year-to-date and Alphabet slipping by 0.2%. Mike Dixon, head of research at Horizon Investments, remarked, "It will be fascinating to see how Tesla and Google perform in their upcoming reports, especially since they have not met expectations within the Magnificent Seven this year. We will need these earnings to exceed expectations if we want to sustain this rally." Despite looming concerns over U.S. President Donald Trump's impending tariff deadline of August 1, the S&P 500 and Nasdaq have recently reached new heights. Investors seem to believe that the economic repercussions of these tariffs may not be as severe as initially anticipated. Trump has threatened to impose tariffs as high as 30% on imports from Mexico and the European Union, while also sending letters to other trading partners, including Canada, Japan, and Brazil, proposing blanket tariff rates ranging from 20% to 50%. While there was some optimism regarding trade negotiations, with U.S. Commerce Secretary Howard Lutnick expressing confidence in reaching a deal with the European Union, EU diplomats have indicated that the 27-member bloc is considering a broader range of countermeasures against the U.S. as hopes for a breakthrough diminish. On the economic front, investors are keenly awaiting jobless claims data and the July business activity report, both scheduled for release on Thursday. Additionally, they will be closely analyzing remarks from Federal Reserve Chair Jerome Powell on Tuesday for insights into the central bank's future actions, especially following last week's mixed signals regarding inflation. Currently, traders have largely dismissed the possibility of a rate cut in July, with the odds for a reduction in September estimated at around 56%, according to the CME Group's FedWatch tool. In terms of market dynamics, advancing stocks outnumbered declining ones by a ratio of 3.02 to 1 on the NYSE and 2.58 to 1 on the Nasdaq. The S&P 500 recorded 15 new 52-week highs and 5 new lows, while the Nasdaq Composite noted 73 new highs and 34 new lows. As we navigate these developments, it raises an intriguing question: are we witnessing a sustainable rally, or are we on the brink of a market correction? What are your thoughts on the current state of the market and the potential impact of upcoming earnings reports? Feel free to share your opinions in the comments.